living the dream.
Hey, Royce,
Hey!
you got the memo about wearing the hat today. Nice.
Hey, I did. I'm ready for this.
We just
No
were going to leave the
questions,
bankers
I
out
promise.
of this little holiday. They believe anything that's thrown at them anyway. Oh, wait a minute. They're the ones that actually do it. Yeah. Okay. So let's introduce this team here. Of course, I'm Darren with Arbitrage Trade. This is After the Bell. We had to wait a little bit of time to hear that bell today. We were yesterday just waiting around saying, when's that bell going off? And then it's like, oh yeah, markets are closed. We'll do it tomorrow. So this is actually Thursday, and that's why I never put Wednesdays after the bell, because this happens. It just happens. My guests are Josh Morgan, not Daniel Hopwood, Mr. I'm off in Asia, and I don't want to do this after the bell thing. No, really, he does.
No, he's either asleep or pretending to be asleep. Yeah.
That's right. Or catching up on sleep, yeah.
Yes.
And it's our founder, Mr. Red Hat, tinfoil red hat. He just had to keep up with me with my little hat up here.
Yeah, read my lips, no new taxes.
Uh-oh. We just lost some viewers. Anyway, that's our founder, Royce Wells. He's also the creator of this awesome algorithm, this AI bot that we have called Pips. I am the, of course, resident retail investor, and I do have a fellow ape on the team, and that is the banker, the aforementioned banker as well. So it's kind of two versus one. We have two apes versus the quant today, and as always, the investors are behind the scene doing whatever they do off in Asia. So I do have a little disclosure. We are not financial advisors. This is not financial advice. This information provided is surely and hopefully for entertainment purposes only. Are you entertained? That's right. Please always consult an investment professional before making any financial decisions. And so let's get started with the tail of the tape. The overall, what we do here is just kind of like what's going on in the markets. The stock market is just absolutely crazy. It's on steroids. And steroids eventually will do harmful things to you. That's what I'm going to say on that. Dr. Harper Ape here, giving that out there.
I don't know. That Z-Pack for that sinus cocktail. Let's go.
I mean, yeah, but
stronger than the avian flu. It's up over 15% this year, actually more now after these crazy couple of days, adding over 5.5 billion to the market cap. And now you got these guys out there, these pumpers, these green pumpers, Martian pumpers. I don't know. They're green. And they are saying now that it's going to hit 5,500, which it did. Now they're saying 5,600 up to 6,000. So if they hit a certain level, they're going to say, oh, well, now it's this. So we'll see. But when you do price targets, remember, folks, it's for a year from now. So if they're calling for a price target right now, it could be next May or so that we actually hit it. That's just the way they do it. It's one of the little games, big games actually, that they play each and every week. So let's give a oh, by the way, we hit like I said, we went over 5,500, which was I don't think we closed at that though. I think we went back down. But that was the first time ever over 5,500. And then we also hit a record high by a penny from a few days ago during the day for the NASDAQ, which hit 17,935 and some change, I think. Maybe it was 85 cents instead of 84 cents today. Either way, a couple more. I mean, it's like, man, where's this money coming from? Any general comments there, Mr. Banker? Since you're the one that funds all these
I don't. This one, I mean, no, other than, our typical conspiracy theories, this one's just, the stocks just keep going up and it's just, we're not getting that roller coaster anymore. It's just going in one direction. But, what goes up must come down at some point.
But does it have
There's
to
medicine
come
for
down
that.
as much?
There's medicine for that. All right. How about Royce? What you got? What's your comment on the stock market right now?
Oh, I'm actually loving the stock market and what's going on with the stock market right now because it's playing a giant game of chicken, right?
Yes.
It's like we got the retail investors saying, no, we're going to push this guy higher and higher. And institutions like, we want to pull out. Is it too late to pull out? Don't pull out. And they're just riding the ride. But don't get caught. It's like, game of hot potato, whatever you want to call it. Don't be caught with the potato once the rug pull comes, right?
Mr. Quant, are you saying that the retail investors are the ones pumping this market? Are you really saying that?
Absolutely, I am. This time.
Okay.
Sorry, apes.
We're still holding on for 3 years. So we aren't doing anything. We haven't capitulated. We're holding on to everything and waiting for these guys to stop playing their game. That's our philosophy on this.
Well, think about let's talk about why I think it's retail versus institution, right?
Fair enough. Oh, yeah, I agree. Fair enough.
Right? Mm-hmm. Typically, in a buying and sell cycle in the market, right? Typically, smart money always follows where the risk is. So when the Fed raises the interest rate, they're literally signaling to smart money that it's safer to be in a bank account where there's no risk of you losing any money and your money will automatically appreciate. Where when the interest rate falls down, it's telling the smart investor that, hey, maybe there are other opportunities out here. Don't leave your money parked. It's not making much money. Go invest it. So every time the interest rate goes up, it's signaling smart money to make sure that they are in safer investments. And every time the interest rate goes down, inversely, go out there and go play. So, and from that point of view, if the institutions are on the sidelines, sitting on cash, just getting risk-free money, why not? Why not?
Or sitting in Bitcoin and then they move it from there back to the equities and blah, blah, blah.
Well, no, that, like I said, that's the retail investors doing all that because they're like, no one's told them that it's too late or it's bad. So they're like, hey, it's water's fine. Come on. But that their reckoning has to eventually catch up.
They will finally catch up.
I mean, not since 2008, you don't hear banks, losing money, right?
Yeah. Forget 2008. We're seeing charts go back to the Great Depression now. So we'll see what happens. Explosion.
Josh, what you got there, man?
He's already had his turn.
Again, I got no relation to the bank, so I'm out on this one.
He just wants more funds in his personal bank. Right?
I have definitely lost money.
You haven't lost it until you
take the loss.
Until you sell.
All right.
Unless there's daily.
Why we have not lost.
Mm-hmm.
We have just averaged down. We haven't lost. Okay. All right. Let's get moving here. We got now let's break it down a little bit. We've got Elon gets paid and maybe. So what happened is the shareholders approved Elon getting that $59 billion, I believe it was, pay package.
As they should.
I agree. I 100% agree. And it wasn't even close. They voted, just overwhelmingly in favor. Yeah. This activist judge, for lack of a better way to say it, in Delaware, had previously overturned the decision that one person brought into it, and the result was that the people on the board of directors were too chummy or something like that. Just to break it way down, and so that was basically the person who brought it won, which meant he didn't get his package. Then they had the shareholder vote. I'm trying to do the timeline here. And the shareholder says, no, we really want you to have this money. And we need you to have this money, kind of. They're almost to that point. And now it has to go back to the courts again, to the same judge. And because she has to re-listen to it now that the shareholders have voted. And the Tesla guys are saying, now that the shareholders have voted, they've spoken. So we think this is new evidence, so to speak. And so that will happen on July 8th. So along with a lot of other things that are happening after Independence Day, and they always talk about July surprises. I'm not saying this is. I'm just saying that it's like everything is going to happen after Independence Day. Isn't this special? We might have Martians land.
That was last week. That was last week.
It's just building, though. It's building.
It's a lot of these like grabby headlines because when you put it in perspective, 56 billion, that's more than Walmart's entire market cap. But that's kind of what everybody seems to get focused on. They're not actually looking at the details of it, and that's why the shareholders. And again, I'm not a Musk fan. Sorry, Royce, but
I'm not a Musk fan or not. It's just he said. This was what he said. He's like, I will do this, and I don't want any pay until I do this. And then the fact that he was able to pull it off, no one thought he could pull it off. He did. I'm like, hey, a promise is a promise.
And it's not like they're paying $56 billion in cash. It's $56 billion in shares. It's incentives. Like, it's not like they're just handing him $56 billion into his bank account. And he also, I don't think they can be, I don't think he can do anything with them for the next 5 or 10 years. I think there's a stipulation there that he can't actually exercise them or sell them for the next 5 years. So, I mean, there's a lot more to this story, but he, you know, for better or worse, that number is a grabby headline, but in reality, he did what he did what he said was going to do, and he did. Yeah,
just keep their word. That's all I ask.
Well, exactly, and good job bringing more detail. The only other details I have for that is if once again he's ruled against, or Tesla is, because it's really Tesla now has brought this suit, not Elon Musk, it's Tesla. If they lose again, then he has 30 days to appeal over the judge's head to the Delaware Supreme Court. So, I mean, that'll get you into August, and who knows? I mean, it just keep rolling like everything else in this country does. Just roll it along a little further down the road. And the guy that did, his last name was Tornetta, I think. He was suing to get lawyer fees of $5 billion refunded to him. I mean, that just sounds crazy. I mean, I don't care. $5 billion, really? So anyway, it just sounds like a money grab to me, but let's go ahead and move on past that. We'd love to talk about
money. Never.
Lawyers are expensive. They're not cheap.
Yes, but man, what kind of per hour is that? All right, so let's move on to Apple decided they wanted to basically take on OpenAI for their AI so that they could integrate it into their iOS. And there's people who have problems with that. And we got to bring his name up again. Elon is one of those main guys that does not like it at all. And he has threatened to pull, or within his businesses, to not allow iOS devices. So, I mean, he's really going overboard to try to say, we don't want this because of security issues that it may cause.
It can be very intrusive, if not. Yeah,
speak to that, Royce. I mean, get a little more detail, because I just have the overwhelming, people just don't like the security issue that might be there.
It also creates an unfair monopoly, right? Because if so you add AI to an iPhone, you had iPad, you add it to the Mac, you have an entire cornered market of people that specifically use your product that no one has the ability. So I mean, if they do add it, what does that now mean? That Apple will exclude and prevent OpenAI from publishing their apps on their app store,
which is ChatGPT, right? That's the one.
ChatGPT being one of them. Grok being Elon's, right?
Well, that's my point. I mean, you say that he's doing it for security concerns. In my mind, or from the things that I have read, to me, it's almost like a anti-competitive thing. Like, you're talking about him trying to prevent a monopoly. I think he's really just, I think he's really just doing it for his own benefit, because he's invested all of this new money into XAI. And if a major player like that backs OpenAI, like Microsoft has already done, then it kind of squashes him out.
Well, listeners will know that I'm not a big Apple fan. I'm an Android. Hey. And so the way that Apple always tries to monopolize everything they do and try to keep everybody in their bubble, and you can't get out of this bubble. I'm okay with anybody that's trying to pop a pin in that bubble. So I'm okay with that. Go Elon.
2 apes versus 2 apes and 2 androids versus 1 Apple guy over here.
Well, there's one in Asia. Remember what was the name I gave him? I don't remember, but it was Applehead something. So Bitcoin Applehead, I think, is what it was.
Yes, that was the name. That was the name.
We added another name too, but I forgot. I'll forget if I had too many surnames.
Well, hopefully we'll get him in. We'll get Daniel in next week, and hopefully we'll even the playing field.
That's right. If everything goes right next week, we will have a foursome on your screen.
I'm not sure that one.
Because our ratings, we got to get ratings going here.
I'm not touching that one.
Nope. Nope. I would love to see what Opus says about that headline.
We got to see what everybody's drinking around here. We got to stop it. All right. Let's move on to the next headline, which is that social media is kind of like smoking. So, and there's a reason. You do?
I can see that.
Smoking, but you're right. We're talking about something else. The U.S. Surgeon General decided, his name's Vivek Murthy. He has pushed for warning labels on social media, kind of like what they had in cigarettes, or they still do. I guess I don't smoke, but there's warnings on them, and he wants that now on social media. And so you can imagine the can of worms that's going to pop open, which is, this having a warning label versus this having a warning label. This platform may have it and that one may not have it. I don't know. I agree with him on one way, which is that our kids are spending way too much, and forget the kids, probably the adults more, are spending way too much time on their phones. And that could be proven. I wish they would release, like, if they made public screen time, like they just have this one big database of everybody's screen time and what the average screen time per day is. I think it would be really, really interesting and probably surprising to some. And
not about 23 hours a day.
Yeah.
I don't think I want
power nap and then right back.
I don't really want that number thrown back in my face. Like,
you don't want to. You can't handle the truth. So it was said that as far as numbers, that adolescents who spend more than 3 hours a day, just 3 hours, on social media face double the risk of anxiety and depression symptoms. And that's just 3 hours. And good and well, a lot of parents say, go get on your phone. Where they used to say, which is go outside. I don't want to see you till it gets dark, right? And there's that meme going around the internet right now. But now it's like, hey, take your phone, go to your room, watch TV. Just, we do not recommend that parenting here.
No, we do not.
So, so what do you guys think? I mean, I know what you think, Royce. I know you.
Oh yeah, what do I think? Talk to me.
I think you probably watch and don't allow a whole lot of screen time.
All right, let's go. I'm ready now.
All right.
Got a bad hat on.
I'm ready. Let's go.
You just got a lot cooler and a lot younger there, Royce. So
there you go.
Tell us what your thoughts are on basically kids and social media. And forget that. How about just people in general in social media? Although we love it here because we are on social media right now. But go ahead, Royce.
Yes. So this is my thing on social media and basically time on social media, right? The longer you're on, or the reason you're on social media most of the time, is to get recognized or to laugh or to cry or to catch up with your friends or whatever and what's going on in their lives. But a lot of people are basically younger people. Maybe it's not just younger people. Basically, they get their gratification. How many people liked my posts? How many people, a thumbs up? How many people loved it? How many, if no one likes my post, am I being ostracized? Am I being ignored? I've even seen people where it's like, okay, I got blocked, or I go to send them something and we're not friends anymore, and like literally have breakdowns because they were not aware. And it's just like, okay, what happened? Right? It's an outlet for the young, but it can be very addicting to people who do not have a lot of friends, perhaps.
Right. And it's killing your social skills too, right?
Yeah.
Go ahead, JPM.
Well, I was going to say, if we're linking it to like the warning labels for cigarettes, it's kind of the same thing. What they're trying to do is their overall health. And when you've got all of these kids that are growing up comparing themselves to all these viral videos, and the viral videos, you got to think about, that's like the top 5 to 10%. Like it's literally, you're looking at what everybody is considering, and it's maybe not be true, but everybody's comparing themselves to the best of the best, not sitting there looking around at the people next to them and realizing that, hey, I mean, I'm just like all of these other people, and so they get these like unrealistic body issue concerns, or they think that they're not good enough because they're not viral enough, or something like that. I mean, you're comparing yourself to what's considered the best in show. And that, yes, in that way, if you consistently do it and you don't realize that you're actually looking at something that is almost abnormal, versus, you know, the average, which is what's around you. And so then it could be a real a physical health concern, and especially a mental health concern.
Yeah, it falls back to mental. I think most things do. It's somehow, some way. I mean, some's inherited or genetic, but a lot of it does fall back to mental. And I remember when there was this big, almost anti-model thing in magazines. Remember that? And it was like, because you're trying to live up to that. So it's like, that's not fair to those models. It's not. It really should be, I don't know, that almost seems like it needs to come back to the home and to the parents and to the community and to the teachers, that to focus on building up confidence and being happy with who you are, that kind of thing, rather than the other way, which is pretty people suck. And I don't want your feelings to get hurt because pretty people are pretty, you know? I mean, that's just me. I don't know. Well, there's two ways to look at it.
And, you know, going back to the comparison, the whole purpose of like putting warning labels on tobacco products, they weren't implying that if you smoke, you're going to die.
Good point. Good point.
It's really just a warning.
Yep.
They're really just making you aware of the risk that you have if you do engage in this particular action. And so by that, I think it's great, because you're not telling them, don't freaking do this. You're telling them that there is a potential for a risk, and there really is, but it's not like, it's not 100%, but it's affecting enough people.
Could this be slippery slope though?
I'm sorry.
Could we get into slippery slope and start applying warning labels to a lot of other things? I mean,
Don't
I can see that happening. No.
You know, warning labels are a direct result of people misusing things, right?
Yeah.
Yeah, right. Right.
I mean, how many commercials do you see that they have to put some kind of disclaimer on there that says, you know, this may have X number of side effects, or this may,
it's like if the side effects is more.
Yeah. Even the crazy people who had where they got lawsuits were engaged, and so they have to put a commercial that says like, this is an actor, like, do not attempt. Like, most normal people that are around you can look at it and realize that's stupid. It's the people
that award winners.
Yes, but I don't know anymore. Maybe not. Remember, a lot of kids missed a lot of school.
Oh yeah.
Oh, no.
Okay.
All right, let's move on. Let's go to the macro factors. One cut for you. I'm going to argue maybe zero, and a lot of others are starting to say zero this year. But we're talking, of course, about interest rate cuts.
Yes.
Oh, by the way, just on that last thing about the warning, it just went through my head. Sorry, I'm backtracking, but the warnings could be used by the hedgies to short things. All right, I'll move right on. Let's go. As soon as they mention blah blah blah, I was going to have a warning on. Okay, let's short it down. All right, let's go ahead. Back to the cut for you. So, how many? I think we were talking about making a wager on how many cuts this year. I think it's too late, but
we're only halfway there.
I know. Oh, we're halfway there.
I knew it.
You knew it was coming. Now it's in your head. So
you're welcome.
Most of the
are you? I mean, like,
what do you guys think? I mean, one cut. I mean, a lot of policymakers now are saying that they are requiring, and I feel like we're just living like Groundhog Day on this thing for the last 2 years. But now they need more data to be able to make a cut. I just feel like we're getting janked around, and screwed around by the Fed and everybody else just to play a game. Let's play a game. So, what do you guys think? They're saying one. I got zero. If I had to put money down, I think we don't cut till next year, maybe mid-year next year.
Wow.
I mean, I would, if you'd asked me early in the year, I would have said September-ish. But now, the way things have they've slowed down, but not to the rate that they need. I can see them still squeezing one in, but it's going to be probably, ironically, it would probably be right around like November or December.
Right.
Yeah, if you want to go back to your tinfoil hats.
Those that are saying two are now saying November, December.
Yeah.
What about you, Royce? What do you say?
I'm saying.
What say you?
I say
one.
And
one. Okay. You know why?
Yes.
I think it's going to take a black swan event, and that will cause the one, because they will go. Oh,
wait,
crap,
why would that cause the one?
Okay, we'll see.
No, but
I'm
why
just
do you think
saying,
that will cost the one?
no, we'll have 0 so they can keep playing their game. But if something breaks and something comes through, then they're going to say, oh, crap, we got to reduce the interest rates because we're really going to go down quick if we don't change these rates right now. And that's what's going to cause the one if we have one. That's just me.
Okay.
Remember, I have no data.
So I'm coming at you now with data.
Okay. Silly numbers. Go ahead.
Economic data, right? Okay.
You're right.
So I'm not sure if you guys have been watching the other countries around the world. And we noticed last week that they cut their rates.
Switzerland cut, by the way. Yes, go ahead.
Yep. And basically, in order for us to cut our rates and remain on top, the dollar has to remain on top. Not sure if you knew or not, but 88% of the money that's traded in the Forex market each day is the US dollar. 88% of it involves the US dollar, right? If we cut, then we're impacting the entire world, which means saying that we're letting everyone else know that it's scary. Me seeing that the other countries are cutting first should allow us to get one cut in, but they have to go first. Otherwise, we're showing weakness. And then the dollar will plummet. So by them basically easing back first, it allows us to step forward, even if it's only putting our toe in the water, to allow us to actually have the one cut I think that we're going to have this year.
Gotcha. November, December.
I have no timeline. It literally depends on, and this is the other thing, as an economist, basically anytime you mess with the monetary system, it normally takes about 6 months before you can actually see the results of that.
The old lag factor.
So the fact that, the other countries started doing stuff late April, early May, that does make it land around November, December.
That does match up, yeah. JPY today, woo! It's going crazy over there. The yen, or not going crazy if you look at the other way. Basically. Any comments on that today, Royce, on the yen?
Yeah, just up and away.
Yes,
up and away.
Why they can't get control?
Look at GBP JPY currently, and it's floating. And we got dollar signs on the weekly time frame, but that doesn't mean anything. Just basically, we've been floating in this range for the British pound versus the yen for a while. Same thing for the US dollar versus the yen. As long as we are up here, basically, it doesn't look like the composite momentum line is actually even stalling, but we did bounce off of. So we did bounce off our trend bottom. So that means basically we hit the lower end of a bell curve somewhere, and basically it forced us to bounce up. So that's what's going on with almost everything versus the yen today. We hit the bottom of the trend bottom, and it's still pointing up, so up we go.
Okay, that wasn't your charge for the day, was it?
No.
Okay, because I
wouldn't do that to you. I wouldn't do that to you.
I would just blame it on the production department. Hey guys, yes, you didn't do it on. All right, because Bitcoin Applehead loves Elon one more time, but actually I'm the one that pulled this one in here because I'm a homer. I love Memphis, Tennessee. It's where I've lived most of my life. And there was some big news that just came out within the last week or so of Elon choosing Memphis for his XAI supercomputer plant. So you got to learn to like him, JP Morgan, because he's going to be a neighbor and he'll be walking in Memphis. We were both singing, weren't we?
You need a lot of security around that building.
Oh, there. Okay, now stop. Here we go. So I said it will be the world's largest, and I need you to define what this is. The world's largest supercomputer site, and one of the big reasons I believe was because of the Mississippi River, because it takes 1 million gallons a day for this plant. And just you can compare it to, a family of 4 uses 400 gallons a day. And of course, a lot of environmental concerns about water usage. We have great water here, by the way. If you've never been to Memphis, the aquifers are excellent water. And and a lot of environmentalists are concerned about what it'll do to that, and also maybe shortage of water within Memphis. I think everybody's just trying to learn what might happen here. It will be the largest multi-billion-dollar investment by a new-to-market company in Memphis history. It is only going to have, guess how many jobs, guys? It's basically going to be the low to mid hundreds is all it's going to employ. And
That's
that
smart.
this,
Okay, it's a glorified server farm.
pretty much, yeah.
Yeah.
And I'm going to let you explain that here in a minute. It will fuel the AI for SpaceX, Tesla, and other Musk companies. And did you know? This is why we do research around here. Did you know that East Tennessee already has the HP supercomputer, which is called the Frontier, and that it does 1 quintillion, that's 18 zeros, calculations per second. And that for this XAI, I know that's kind of quick, almost as fast as me. The 6 billion has already been.
I wasn't going to go there.
All right, y'all, you guys, what have you guys been drinking today? I don't know. Stop those pills. The investors have put about 6 billion already into this XAI, and of course, it can only go up from there. Y'all got to stop. So, Royce, Mr. Quant, you are the one, because of your title, that should explain what a supercomputer site is.
Okay. So a supercomputer site is more or less, let's see, it's just a bunch of servers. So like, okay, let's talk about the cloud, right? The cloud basically shifted where computing was previously housed and held, right? So previously companies would have their own server farms. So that means a room with lots of air conditioning and all of their servers on premises and basically connect out to the world. Right.
Yep.
So a supercomputer is more or less just a glorified server room with a computer that's basically daisy chain rated, and basically all the pieces and parts talk to each other as if they are one giant computer. Right.
Gotcha. What was the name of that computer? The famous computer back when all this started? They had a name for it. The dude's
name. Wait, no.
What was that name?
IBM.
See? Not everything is scripted. No, it had a name. It was. I think it was out of a movie. That
Hal.
Was it Hal?
Hal.
That might be one of them. Okay.
Hal.
And you know why it was named Hal, right?
Because AL looks like artificial intelligence. No, I'm just kidding. Go ahead.
No.
What?
HAL is one
off. That's it. Yes.
IBM.
Oh, I did not know that.
It sure is.
Okay.
You learned something today.
I did. I'm gonna learn you today. Yeah, that's good. That's excellent trivia.
Right.
Okay, trivia host, write that down. Any comments there, fellow Memphian, JP Morgan?
I mean, the good comments I have are that there's
painful for you.
It is. Yeah. I mean, yes. Sorry, I'm one of the naysayers, but there's a lot of issues. You know, there's a lot of lower. I mean, the taxes here really aren't that bad. It fits like the value, land values. Like he can get a development going here, and it's not going to be overly expensive. You know, the point that you made about the water, like he could siphon some off, keep everything cool. As much as I complain about our MLG&W and my utility bill, like we do have relatively affordable electricity, and that building is going to use a lot of it.
For now, yeah.
Yeah, that's what I'm saying. For now, it's but we've had some strangely prosperous last few years from like 2019, like our 2019 to now, our job growth rate has been one of the better ones in the country. We've actually been, I think I saw something about we were ranked #1 in STEM growth in the country, which I didn't know that. Shocked me. But there are a lot of benefits to moving to Memphis, and for a larger industry like that to come to Memphis, it does make sense.
Nice. We'll just stop there with the positives. There was also the fact that there's some hype about Memphis becoming one of the tech centers of the world. So that would be cool. That would be really cool. I mean,
center of
the
US,
Peabody
so.
rooftop parties will get really crazy.
Oh, we don't need that.
Do those still exist?
Yes, they do, actually. These other people don't know what that is.
I've not been to one of those in so many years.
But also, Elon is going to invest in some energy programs and projects that are going on right now and speed them up, I think, is part of the deal, too. So, you know, it's not all bad there. JP Morgan, he does some good stuff, too. So,
always for a price. Remember that.
Yeah, it is always for a price. That's right.
It's always money.
All right. What were you going to talk about today there, sir, on your crayons?
Well, crayons. Let's go take a look. Let me actually pull up the guy I wanted to talk about. Where was it? There it is. CVS. I'm going to talk about
looking at CVS.
We're looking at CVS again. All right. So this is
right.
Again. So I think about week 7 or 8, CVS was one of the ones that we picked, right? And basically, we're watching it from where it did this bounce that was roughly at the end of May. So we've almost gone 1 full month. And CVS, if you basically were looking at it when it was in that $52 range, because I think we had 47 or so where we started talking about it, it's been going nothing but up. So literally over the last 4 weeks, nothing but up since we had that little dollar sign that showed up on Tuesday, May the 28th, right? So let's go take a look at what's going on and see if.
Hey, Royce.
I'm sorry,
Royce. I was just going to explain for those, maybe it's the first time for them seeing that dollar sign, that means that you're going to trade. It's time to sell, going down. Take your profit going down, and then it's going to reverse back up. Correct.
Correct.
Yes.
And that's also very much so indicated by the line going out of bounds and then coming back in. Those dollar signs are literally to warn you that, hey, you're running out of probability. It's time to take profit. Right?
Excellent.
All right. So now I'm going to go down to our 15-minute chart to see, will this continue or is this the end of the road? And looks like it's not the end of the road at all, because it looks like the arbitrage band on the 15-minute chart. Let me double tap in and see where it's going. We're getting kind of close to the $61, $62 range. And we see that our trend top is roughly about $62.35 up here. That's the top of this red band up here. So on the 15-minute chart, it's still steady as she goes. I'm going to change this chart one more time, and I'm going to bring up our apocalypse band, which is one of our bigger bands in the system. Right?
How many bands do we have?
We have about 12 of those that basically help us make decisions. And looking at this is really nice. So what we're looking at here, we're on the 15-minute chart. That purple line, basically, that's our warning that basically we should be getting out of the market. But if we can get back above the purple line, which we did roughly June 17th, again, we got back above that line, and basically it's still clear skies because
bounced off of it, didn't it?
Yeah, bounced right off of it. And so we have the potential to go up even further. On the 15-minute chart, the 3-week forecast is about $66.36, which means there's about another 10% potential gain in this trend. For the buy trend to continue successfully, however, because nothing goes straight up, we're looking at our dashboard indicator, and on this time frame, 15-minute time frame, the apocalypse man is saying, hey, in order for us to continue going up, we have to bounce off of 60.47 just one more time to allow this light to go off to allow us to go higher. So expect a little bit of a dip in the next few weeks to maybe touch that 60.46, and then potentially from that low, we should be able to go higher. That's all I got this time. Thanks again, guys.
Thanks, Royce. I think everybody learns a little more every time you do that. There's so many indicators. It takes a little bit of explaining to us, especially for people that are new that haven't seen it yet. But basically what you saw there was a graphic representation of the 12 bands of the indicators that we have that are special to us, and they're very accurate. But we are not financial advisors. We just like to look at charts, and
we follow trends, and that's what these indicators
follow trends and possibilities. Yes.
Yes.
All right. Hey, let's just get that disclaimer out twice in this one. So I think it is time to move on to one of my favorite subjects.
The apes winning another week. It's okay.
It was a lot. Did you hear that long breath? I mean, he's on my side. He's an ape, and he still gave it just because he wasn't the ape.
I mean, I support a fellow ape, but
oh, except for when you go.
It was
he's a mole. Week. I'm telling you guys, he's a mole from the bank. All right, so if you look at the chart, I've got it up, the after the bell chart. You will see that finally I am leading the non-quants, but it's not just about me. The apes now are up to 5, and we are breathing down the neck of Mr. Quant. But it's really not fair because there's 2 of us and just 1 of him.
That's okay.
We like to have fun anyway.
I'll take my lumps. Anyway. I'm not afraid.
It's make it, take it. So I get to choose. I'll tell you that in here in a minute. And then, of course, Daniel, that lonely institution all the way out in Asia right now. Someday he might be with us again. Like I said, next week we might have 4 corners. See how I clean that up? Yes, I cleaned that up. So let's go back to there they are. There's your beautiful faces again. We're back to them. So I will tell you what happened. The stock was coin, right? And the channel was 240 to 255 for Royce, which is it was a large one because we had a large channel to look at, which just tells you all about what the crypto world's about right now. Mm-hmm. But the banker was above, and I said, no, it's going to go below. And sure enough, it did go below.
This guy, he's milking for everything it's worth.
It's also my first back-to-back, so I got to get the T-shirt. I got to order the T-shirt. All right. So I did suggest what I was going to do after, because I knew I won because the bell actually was Tuesday, so I had one less day, and then I started hearing some grumpy complaints, like it really should be today because it's Thursday. That would have been Wednesday, and you know what? I would have won even more so if it was today. So.
Like I said, we already won. So
I know. I think it's fell to like 235, by the way, today.
234.
I think that's about what it closed. Yeah. Okay.
That's after the bell. It's 234.50.
There you go. See, I keep up with these things. I don't come with all just pipe dreams. I had a little fact. So this next week, and I'm going to leave it. It's like a multiple choice. I say this is kind of fun. We'll try to see if we all 3 can agree. The choice is UBS or OXY, Occidental, which is petroleum. And I will tell you that OXY is the one that Buffett almost owns 30% of now, and because he's been piling in. So I thought that would be fun. Right. And then UBS is fun because us apes, we do not like UBS because that's who Credit Suisse's trash and garbage went to. And they're still, what's
the symbol for the other one that Buffett has?
They're still trying to, I'll get there. I got to get on with this fun stuff. They're still trying to hide it in a bunch of crap that they don't want anybody to get to. They sealed the freaking records to 2055. Ask yourself why. Ask yourself why they have to seal these records of these swaps and where all the money went till 2055. All right, I'm off my soapbox. It was UBS and OXY.
OXY.
Get me all sweaty up in here talking about stupid Credit Suisse.
I like both of these. I
figured you would. I thought so. Yes.
But for different reasons. That's okay. So let me bring them up side by side to make it a side.
Hold on,
let
me pull it up on the chart here so people can see. All right.
So now let me unlock them also. Hold on.
That's my favorite part is the box up there, the gray box.
All right, there we go. So, all right. So let's play with this. So we got Oxy on this window, and let me get UBS on the other.
All right. So before you complete this, and because we do clips during the week, I just want to get a fresh start here. This is our wager for next week, and we're considering right now UBS or Occidental, which is OXY, and which one we're going to choose. And he's going to look and see what kind of channels we have based off of our AA bot Pips, who's given us these graphs to make a decision on what might be the most fun to play.
Absolutely. Right. I'm getting my charts dialed in. So the band, so there were apples to apples comparison, Apocalypse Man versus Apocalypse Man, and nothing.
We're showing our secret sauce, Royce.
What? We're not
We're
talking about
showing
the
our
other
secret
band.
sauce, all those changes.
Hey, we like changes. All right. So I have UBS over here and I have Oxy over here. So let's do Oxy first.
Yep.
All right. So Oxy first. Oxy on our 4-hour time frame is butting right up against our canary line. So basically, this is heavy resistance where we're currently sitting, which means getting over 64.29 is a major feat. If it can pull it off, though, then we have a lot of support. I am going to guess that we are not going to get there, mainly because probability is saying we're running out around 63 and some change, right? But also looking at this range, we got like 63.93 all the way to probably about 57-ish. So that's about a $6 range or so for us to play with if we wanted to do this one.
It's real narrow.
It's real narrow, so about $2 each. But hey, not necessarily a big mover.
Okay.
All right. So I'm going to pull back out here and pull into this guy, or switch over to this guy rather, and over here, it's the opposite tail of the tape because we're sitting on top of that purple line and that pink line. So it has support. And I see dollar signs on this 4-hour time frame, which means it leads me to think that this guy, hey, that you hate to love, should be going up in the near future and could get as high as about 33.40. But his range is really small. There's only about a $3 range on this guy. So if I had to pick between the two, Oxy would be the one I would pick only because its range is bigger.
Okay, just to correct something there, it's who I love to hate, not the other way around. I got to. Okay.
You hate to love?
So, no, I love to hate. All right. So, I think it's a good idea because I don't like to speak those words on my tongue, UBS. So that's fine. We will make it Warren Buffett's. I guess it's probably his favorite. I don't know if he has more percentage than anything else, but that's 30% right now of Occidental. So those are fun filings he's got to do.
Yeah, but getting over that line, if our compass line can actually make it above, there's some good stuff to be had from this. Looks like the 2 to 3 year forecast for this guy, he can make it all the way up to about $105 per share. That would be amazing.
That would make sense if he put all that money into it and then they actually let it come to the live market. All right, so we got.
You see that green X down there?
Oh, there you go. Oh, okay. So it could be a 50-50 proposition here then. Probability you're saying is up.
Probability is up. There's more probability.
Or that probability has happened and now it's going to hit that line and come back down.
Yep.
Okay.
So basically 4-hour and the daily are fighting with each other.
Right.
But it looks like the shorter term trends are pushing it up. And for it to succeed, the trend top and the trend bottom, that's the red and the green band that you see here, has to make it above both that purple and pink line. If they do, then we see a nice uptrend. If they don't, then we sink back down into the depths, potentially finding support somewhere near around $49 per share.
Okay. So your range, you said, was tight. $6? Is that what you said?
Yeah, it's about $6. So about 57 to about 64.
57 to 64. All right. That is our wager range. We have been, I get to go first because I won again. Back to back means I get to take a wider range, right? It's a new rule this
what?
Yeah.
All right, no, I'm just kidding. So it's sitting at what right now? 60
62.72 after the bell.
62.72 after the bell. Okay. I heard that show was a good one.
Right?
So it's already at the top end of that range, and it's gonna
might hit that $2. If it stays up here and holds this level, it can hold another week.
It could hit 64 though and pop after that. So
yes.
So what should we make the middle range then, Royce?
I would say 60 to 62.
Okay. Yeah, fair enough. That's a tight range. I will not be taking that range. Since I get to go first, I will take 62.01 and up. So I am up. Right. The banker wanted that one. I can hear it.
Hey, I see the green X. Of
All
course
right.
you want that one.
Yeah, that one just looks. I mean, that has bounce written all over it. Like that's gonna doink real hard.
I have a feeling it might hit the red and come down, but I'm going to go with just because the institutions need something else to pump up the market. I'm going to say it's going to pop past that. But what do you say? I guess Royce, you have to go next.
I'll take that middle 60 to 62. Give me that all day.
Okay, well, I'm completely screwed. Okay.
Once again.
Okay.
So you are 59.99 and below. All right, but that's a wide range.
If it doinks hard, hey, here's the doinking.
We were going to be watching for that doink all week, and we like to get, kind of get at each other during the week. Who's ahead, who's not ahead, all that good stuff. And I'll be going for the three-peat. Hey, LA Lakers, we're going to go for the three-peat.
I just want to, even when I'm not winning, I'm watching the chart.
Annoyingly so, because we will get these emojis. If he's doing well, that emoji comes on, and we're like, boo. But it is kind of fun.
You're on the what? Apocalypse band or advanced?
Yes.
Okay. Pull the 15-minute chart up.
All right.
Let me pull it back up again, too, for everybody. There we go.
Since we're only doing 7 days or 6 days.
Yep, 6 days.
Shorter time frame. Good.
So I do see a doink coming.
Okay, I'm feeling a little
That's
bit
the technical term, doink.
I'm feeling a little bit better about the under. Okay.
That's the doink line.
So, yeah, it should get stopped at about 63.57 and come on back.
Hey, what do we call that line?
The fact that the mean of this system is sitting at 60.67, which means right in on the edge of my range, but still in my range.
Well, okay. Royce, what do we call that line? The top one, the doink line. What is it actually called?
That's 3 standard deviations up on that bell curve for the arbitrage for the apocalypse band.
Just for the technical people out there, I want them to hear that. So let's get back to our ugly mugs. All right, guys, it's time to close this puppy, and we don't have to worry about a day off next week, right? There's no special holiday that was just. I mean, there's no new holiday. I'll just say that I don't know about next week.
I'm just leaving. I'm out.
That's right. It could be a fun one, though. It's going to be after these. I mean, Jimmy, I think, has already had its fun, but this is when a lot of those calls are going to be had tomorrow, and then it's going to be Monday, Tuesday is when that could have an effect. It'll be fun to watch because that's from a past show, if anybody's watching that. So it could be a fun week. I hope to see you guys plus one more from – I mean, if I rhyme, one more from Singapore. That sounds better, but I don't think is he there again? Is he back in Singapore? Yeah, one more from Singapore. All right. Thanks for coming in, guys, and I will see you guys next week on After the Bell.
Take care.
Dilly.